That's the Sunday Papers, and now we'll go straight to our program guest, and this week it's the Minister for Finance, Mathias Cormann, who joins us in the very early hours, Perth time. Good morning, Minister. Thank you.
Good morning. Good to be here.
We'll start with the financial advice legislation. You're talking about tweaking the amendments, and is there a chance that after community consultation you'll throw them out altogether?
No, there's not, Barry. I mean, our objective is to ensure that people saving for their retirement across Australia can have access to affordable, high-quality advice with appropriate levels of consumer protections. The changes the previous government imposed went too far. They imposed too much unnecessary and costly red tape, which has pushed up the cost of advice and which has also led to a lessening of competition and diversity in the financial services market. These are both developments that are not in the public interest and that are not in the consumer interest, and we will seek to rebalance the financial advice laws, preserve the important consumer protections, but make sure that there is some cost pressure taken out of the system so that people have to pay less for high quality advice.
Well, you talk about consumer protection. Why is it then that apart from the banks, apart from the big banks, nobody really seems to want this?
Well, I mean, this is an area that's highly technical, and for people with a vested interest, and dare I say, people with political motivations, it's very easy to frighten people. And there's been a lot of misinformation spread around. Some people have suggested that we would abolish the future financial advice laws altogether. Not true. We're just proposing to improve them. Some people have suggested that we would abolish the requirement for advisors to act in the best interest of their clients. Not true. We're keeping the requirement in full. We're making a small adjustment to the test that advisors have to satisfy in order to ensure that consumers and financial advisors are very clear on what the financial advisors' obligations are. People have suggested that we were bringing back conflicted remuneration for financial advisors. Not true. So what I'm currently setting out is to ensure that there is a clear understanding of the facts, and if there is a capacity for us, by more precise wording, to better reflect our policy intent, the policy intent we took to the last election, then of course we're very happy to do that.
You say it's a political scare campaign in part, but do you see the problem that bank employees can pretend to give personal advice when they're really selling a product, and they're selling that product to get a commission? Now, what form of words can you come up with that prevents that from happening?
Well, I mean, firstly, right now, courtesy of a special deal that Bill Shorten did with industry funds are able to provide general and limited personal advice, charge an undisclosed fee for that advice, and that advice, incidentally, is exempted from the opt-in requirements, and people are not able to opt out from that particular fee. So what's happened here is, I mean, of course, a product provider should be able to incentivize his employees to provide general product advice, general advice about the products. When there can be no suggestion that if you walk into a bank and you talk to a bank teller and the bank teller is providing you information about the bank's products, that is a conflict. I mean, you'd expect them to do that. Historically, what people have been concerned about is about financial advisors who, for all intents and purposes, present themselves as independent from any of the product providers, making judgments on the basis of where they would get the best and the biggest kickback rather than what is in the best interest of the client. That shouldn't be allowed to happen. That is not going to be allowed to happen under the legislation that we are putting forward. But of course, what we do think should be able to happen is that product providers should be able to provide information and advice, general advice, about their own products.
Yeah, sure, but can you find the form of words you can't drive a truck through so that these advisors can't disguise sales and wrap it up as advice?
Well, and that is exactly the conversation that we're currently having. And if there are adjustments that can be made to ensure that the wording in the regulations more accurately and more precisely reflects our policy intent, then of course we'll take that on board and we'll make those adjustments.
The impression was left that Arthur Sinodinos, the former Assistant Treasurer, developed these changes, but in fact it was something that you were working on in opposition, right, and that he inherited from you?
I was the Shadow Minister for Financial Services and Superannuation, and I developed our policy in the lead up to the last election. It was based on extensive consultation and on the benefit of a series of parliamentary inquiries that looked at the financial products and services across Australia. So absolutely, I mean, this is an area that I was responsible for in the lead up to the election.
Now, looking back over the past week, you're disappointed that there was precious little talk, certainly precious little talk that broke through to the community about debt and deficit and budget preparations. It did seem as if the government went off message in a critical week.
We're totally focused on Operation Repair the Budget. We've inherited a very bad budget situation from our predecessors, $123 billion worth of projected deficits over the forward estimates, debt heading for $667 billion without corrective action. The Treasurer, the Prime Minister and the whole Cabinet and we are very focused on making the decisions that need to be made in order to put our budget back on a more sustainable track.
Well, just before we get on to the budget, then just one question on these awards. Do you think that to have merit, it would make sense for these awards to have community consensus, to be bipartisan in their approach?
Well, I think that was a great announcement by the Prime Minister. It is a great way to provide special recognition to preeminent Australians who have made an extraordinary contribution to our nation. I think it's a great announcement, and I think that the Australian public will embrace it.
So community consensus doesn't matter? In fact, he didn't even take it to Cabinet.
Well, I mean, the Prime Minister is the head of the government, and there's certain things that are a prerogative of the head of the government, and I've got no issue with that.
All right, on the budget now, and the sentiment that seems to be coming through, and I'll ask you whether this is a true reflection of the way the Cabinet Ministers see it, but that you'll be marked down if you don't take strong, decisive action, and that you're satisfied the public has got an appetite now for toughness.
Well, again, I mean, we've inherited a budget in a mess, massive deficits as far as the eye can see, debt heading for $667 billion. Of course, we've got to make some difficult decisions in order to put the budget back on track. We took a clear commitment to the last election that we would repair the budget, and we will.
You talk about what you inherited, though, and the forward estimates. Labor clearly loaded them up with unsustainable levels, as you would see it. But two of those big areas contributing to this are the Gonski reforms and the NDIS. Now, you signed up to both of those, so that's a shared responsibility, isn't it?
Well, we signed up to the funding for the Gonski reform, so-called, over the first 4 years. I mean, what the Treasurer and I pointed to this last week is that a lot of the cost was actually loaded into the 5th year beyond the forward estimates, so that wasn't transparent to the public. And I mean, it was quite amusing in a way this week to watch the Shadow Treasurer, Chris Bowen, and the Leader of the Opposition argue that if only we kept to Labor's fiscal rules, which prescribe a limitation on real growth in spending to 2%, that the budget would automatically and easily get back into surplus. Well, the truth is that from the 4th year to the 5th year, consistent with spending that Labor has already locked into the budget trajectory, spending is set to increase by 6% in real terms, 3 times as much as would be the case if Labor indeed had complied with their own so-called fiscal rules in government.
Yeah, but to take my point, though, you're on a unity ticket in terms of what's contributing to that. You're on a unity ticket on Gonski and on NDIS.
Well, we're on a unity ticket when it comes to Gonski for the first 4 years, and we've always said that over
and all the way through on
term,
NDIS.
Well, and of course what we've said in relation to the NDIS is that we will implement it, and we will implement it in a way that is as efficient and as well targeted as possible, and that is the work that is currently underway. And Senator Mitch Fifield, the Minister with responsibility in these areas, is doing an outstanding job in identifying all of the issues that were caused by Labor's rushed political implementation timetable, when what was required was a sensible actual implementation timetable. There was an independent review that was done that actually noted that the way Labor approached implementation of the NDIS was a bit like trying to build a plane in flight. So, I mean, we are making all of the necessary adjustments to make sure that spending in this important area of policy is as efficient and well targeted as possible.
Now, this new proposal that the Treasurer has put to the states on assets recycling, if the states sell assets and then spend money on infrastructure, then the federal government will top that up by 15%. Are you confident that the premiers will eventually go along with this?
Well, I mean, the treasurers, the state treasurers all agreed to this as a way forward. This is, of course, part of our plan to build a stronger economy and create more jobs. We want to essentially free up the capital from existing assets that will continue to be of benefit to the economy, whether in public or in private hands, so that the state governments and the federal government have the capacity to invest in productivity enhancing infrastructure of the future to help us grow the economy more strongly moving forward. I mean, this is a very good plan, and we're very confident that when it's all said and done, the states will take advantage of it, and yes, that the premiers will come on board.
And this 15% that the federal government will provide, does that come off the budget, or will that come in from your own asset sales, like, for example, Medibank Private?
Look, I mean, we'll provide all the detail as appropriate in the budget to be delivered on the second Tuesday in May. But just by way of general comment, there's got to be an understanding that when, right now, at present, any asset that is owned by a state has got their company tax payments reimbursed by the federal government. So once any state-owned asset is sold into the private sector, they will end up paying company tax to the Commonwealth. So the 15% payment in recognition of the investment, the additional investment in productivity enhancing infrastructure by the states is an incentive to get them to do the right thing, but it is also a recognition that the Commonwealth will be able to increase its tax base on the back of those sorts of asset sales.
Just one final point on that, though. Is it a bit tough on states like Victoria and South Australia who say that they've done the right thing and they've sold a lot of their assets to the point where they've got precious little left to sell, whereas the states who have dragged the chain, like New South Wales, for example, they have the most to sell, therefore they have the most to gain. Now, how is that fair?
Well, we are where we are. We can't deal with history. We've got to look forward. And we've put a plan on the table that will be able to benefit all states, including Victoria and South Australia, if they take the opportunity up.
Now, just finally, you've picked up everything that Arthur Sinodinos left behind in the pre-budget preparations. The Treasurer, Joe Hockey, will be out of the country for a week or so very shortly. How are you finding the workload?
Look, I mean, you know, we're all working as part of a team. It is clearly a significant effort right across the government. It doesn't come down to one individual. There's a lot of officials involved, across a whole range of portfolios, as well as, of course, the Prime Minister, the Treasurer, and myself and others. So, look, I mean, you know, it's all going to be good.
Minister, thanks for your time.
Good to be here.